So I'm over here rooting around on silverdoctors.com. SRS Rocco makes a good point, because I've kind of struggled with this thing myself, and I'm going to find out in a second. But he just did an interview. Was it with Cross the Street? It might have been. Anyways, massive stock correction to send metals surging as elites lose control, according to SRS Rocco. And these are two different articles, actually, but one's basically one small paragraph in a video. So I'm going to, like I always do, post these links in the description. But he says, with the broader markets continuing to be propped up by hot air and central bank intervention, only a fraction of investors have prepared for the massive stock market correction with physical gold and silver. Some precious metals investors fear that when the broader markets crash, so will the price of gold and silver, just like they did in 2008. However, SRS Rocco does not see it that way. He talks a little bit about that in this interview. But they have an article afterwards from him as well, which digs into a little bit of it. So that's what I'm going to focus on. There is an both of these are from Silver Doctors, but it's from SRS Rocco. And his site is srsroccoreport.com, in case you're interested. There is an eerie calm in the precious metals market as investors continue to pile into the broader stock indexes. Precious metals sentiment that was flying high last year when the Dow Jones index fell 2,000 points is now at an all-time low. Investors who are highly fickle have no idea that they will lose a great deal of their supposed paper wealth. The word on the street, as it pertains to the precious metals retail market, is that investors are no longer waiting on the price of silver to fall to start buying. Rather, they are now waiting to see what happens to the broader markets. Speculation is that if Trump is able to get the corporate tax cuts passed, then the Dow Jones will head upwards to 25,000 or higher. While this is a possibility, investors should realize the market is already seriously overextended. Sure, it could continue to move up, but the correct way to invest in precious metals is not to make a perfectly timed purchase when the rest of the market is crashing. Rather, it should be done on an ongoing basis. Investors should be purchasing metals over a period of time, not one large amount due to the timing of a market collapse. If we look at the Dow Jones index versus the silver price, we can see a very interesting trend that took place when the Fed announced QE3 back at the end of 2012. At the end of 2012, the price of silver really started to decline as the Dow Jones index continued higher and higher. Some precious metals investors are worried that the next time the stock market crashes, so will the price of silver, as it did in 2008. However, this time will be different because the silver price fell by more than 70% from its high in 2011, whereas the Dow Jones index has surged towards the heavens. As I mentioned in my interview on Cross the Street, there was a near-record gold ETF inflow, 364 metric tons, when the Dow Jones index fell 2,000 points during the first quarter of 2016. The only other large gold ETF inflow surge, 450 metric tons, was during the first quarter of 2009 when the Dow Jones index was crashing into the toilet to a low of 6,700 points. What is going to happen when investors really get spooked as the Dow Jones corrects 5,000 points or more? Well, I can tell you that we will see record flows in the gold and silver ETFs. However, I don't believe it is wise to go from one paper asset to another. And I am not the only one who believes this. If we look at silver investment demand in physical bar and coin compared to ETFs since 2007, this is the result. Let's take a look at the chart. So silver colored one is physical silver investment. The blue one is ETFs or paper, SLV, GLD. And as he says, investors purchase 10 times more physical silver than paper silver ETFs from 2012 to 2016. That, my friends, is a very interesting stat. From 2007 to 2011, total physical silver bar and coin demand was 687 million ounces versus 419 million for the net silver ETF paper. But look what happened from 2012 to 2016. Physical silver bar and coin demand nearly doubled to 1,152 million ounces, or 1.1 billion, I guess you could say, while the net build in silver ETF inventories only increased 112 million ounces, which means investors put 10 times the amount of money in physical than into paper. Of course, when the markets finally crack, mainstream investors will move into silver ETFs because they don't know any better. However, it will be the precious metals investors who will be buying physical silver hand over fist. Unfortunately, trying to time the market crash and purchase silver when the situation gets real ugly will not likely work out as many suspect or expect. Rather, I see a silver market that is totally overwhelmed with very little available physical silver. It is impossible to forecast when the broader markets will finally correct and likely crash, but I would not try to time this market to get into physical silver. I am not giving out advice, but I am instead stating what is sound, logical reasoning. Lastly, it is not a matter of if, but a matter of when the stock and bond markets are going to crack. Yes, the Fed and central banks have defied gravity for nearly a decade by propping a market that died in 2008. But time is not on their side, mark my words. So his one little sentence where he says, unfortunately, trying to time the market crash and purchase silver when the situation gets really ugly will likely not work out as many expect. Rather, I see a silver market that is totally overwhelmed with very little available physical silver. That is precisely what the Webbot has been saying. In the data, we see a panic, a sheer panic to own precious metals, and especially a panic to own silver. Numerous times in different reports has that data been in there. Again, it's just a matter of time. Wait it out. It is going to happen. But the thing I was talking about in the beginning of this video, so I kind of struggle with a little bit, is will the market, as in silver, will it crash down like it did in 2008 and 2009? It might actually do that. And what he's saying is don't bank on it. It's under $20. Hell, it's a buy right now. And it was up like 40 something cents today, silver. Gold was up, I think, 29, 30 bucks. All of a sudden, after they got a little whack job just the other day, silver was at the same price. They nailed it down to like $17.95, 6, 7. And it's right back. It is right back where it left off as if nothing happened. And again, all I can think about is how last year it took 40-something% more money thrown out the paper market to keep a stranglehold on the price. So if that is a trend, and I absolutely believe it's a trend, this year, by the time we get to next year, if we can get that data, we'll probably show the same thing as last year, or at least some degree of more money. And if it was up 40-something% from last year, the year before, so 2015 to 2016, and in 2016 they had to spend 40-something% more on the paper market. If 2017 comes along and we say, oh, well, they only did 20% higher, it's 20% from last year, and last year was 41% higher. Follow me? It's still a massive amount if we see numbers like that. But what happens if we see numbers of epic proportions of paper dollars they have to throw at this market? It's very possible. It is absolutely very possible. But banking on, well, in 2008, the silver price crashed down to, $10. I remember, because I keep telling you every time, I got some silver eagles at $10 plus the premium was $2.25 spot over spot. I paid 10 plus 2.25, $12.25. Now, if you think about that number for a second, dude, you paid 20%. You paid 20% premium, correct? And do you remember a few years ago when silver was like, they nailed it so far down, it was like $15 or something, or maybe high 14s, I don't remember. Somewhere around 15. And then the premium shot up, and it was still costing like $20 to get, or no, it was 14, 15, 16, 17, 21 bucks. Because I remember, I said, oh my gosh, 50% of the silver cost for premium right now. I remember talking about it in a video. It was like 14 something dollars, add 7, it's 21 bucks. I was like, oh my. There's a massive premium all of a sudden on Silver Eagles. But again, if I see, and let's just say I am very, 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 very content with the amount of silver I've accumulated over the years. I don't plan on buying any more. I've had enough of it. I've got plenty of it. I need to just save some money on the side for other things. I'm not touching silver anymore, like adding to my stack. And then later this year comes, markets crash, and sure enough, silver and gold get smashed. Don't think for 1 second I won't go buy some more, because there's a simple reason. Fire sale, they nailed silver down this 8, 10, 9, 10, whatever, dollars again. I will load the boat again, even though I normally wouldn't need to. Only because I will recognize that as like a once-in-a-lifetime opportunity. And we saw what happened last time from that low. If you got in at that low and rode it to $50, you could have made 500% profit. And again, if you unloaded at 50, I never wanted to unload at 50. No, I'm always a buyer. I'm buying all the time. Of course, I've slowed down in recent times, but point being, don't sit there and wait for it. Get your stack going and then say, well, you know what? I do have a credit card, whatever, yada, yada, yada. I could use that like in an emergency. And believe me, if silver smashes down to 10, 11, 12 even, that's my definition of an emergency. Pull that sucker out, get your stash, and then start making payments back on it. Or you could be smart. Like if you really can't afford to pay the credit card too much, it's like it's going to be a struggle. When that happens, you make your purchase on the credit card. Silver will start rising again. And then as it rises, you can sell a little bit, pay off the credit card. Rises some more, sell a little bit, pay down the credit card. But that also means silver has to rise in a decent amount of time. So you're not just stuck paying the minimum payment. But this time around, I do believe that'll happen, because I think there'll be an absolute flooding of people in the precious metals when this whole system goes down. When Tesla stock, $313, 10 years of nothing but losses, absurd. Snapchat, $30-something billion IPO. What is this? When that crap goes down, investors will be fleeing for their life for anything that will save them. And we have thousands of years of history of one thing that has always saved people financially: precious metals. Take care.